Welcome to another episode. Today we are talking about hard forks. Back in episode 7, we talked briefly about hard forks and when they become taxable, but today we're going to talk about them in more detail. So a hard fork is when a single cryptocurrency splits into two. It results when a cryptocurrency's existing code changes, thus creating an old version and a new version. So at this point, there are two separate ledgers, one for the old coin and one for the new coin. And the coins are completely separate at and after the point of the split, but before that, they share historical data. All right, so what I think about, so the example I give is Bitcoin, because it is the most popular one that we hear about. All right, so Bitcoin existed, and here's their ledger, okay? All right, so here's their ledger, and at this point, it forks, meaning it creates Bitcoin Cash. All right, so at this point, Bitcoin's ledger keeps going, and Bitcoin Cash's ledger goes this way, okay? But when we go back, there are two separate ledgers from this point on, with the same historical data before that. All right, does that make sense? It's not important that you super understand that, other than that you can see same data, same data, same data. Now we split off into new data. All right, so there are various reasons why a hard fork can happen. All right, so first, it might be to fix security risks from an older version. So you guys, just like the dollar, okay, let's talk about the dollar and how over the years it's become harder and harder to counterfeit, right? I mean, if you look at a $20 bill from 30 years ago and you look at a $20 bill from now, I mean, they look fake nowadays, right? And it's because they have all this technology now that makes it harder for them to counterfeit. Well, cryptocurrency is going through those same types of upgrades, all right? So they're upgrading to find security risks and to fix them. And so one way they do that, or that's one reason for a hard fork, is to fix security risks that they find in older versions. All right, a second reason is to add new functionality. So it's the ledgers are upgraded year to year, okay? So the ledgers, you guys, are open source development, meaning everybody has access to the ledgers, right? They're public knowledge. And so developers out there work in this open source development, and they work on the ledgers, and then they propose their improvements to the community. And then if their feature or their improvement is good enough, it's added to the next version of the ledger, okay? So note to you guys, I am not a developer, so if there's a developer out there and you want to tell me that I use the wrong lingo or something, you go right ahead. But for a non-programmer, non-IT person who just is here for, like, I am crypto tax knowledge and that's my jam, this is how I explain it. So number 2 is to add new functionality. And the third reason is to reverse transactions. So this has happened in the past when there's been a security breach. So what happens is the ledger rolls back. It's essentially reversed back to a specific date before the security breach happens, and then everything after that date is treated like it never happened. All right, so we're going along, and we're like, something went wrong. So we back up to where the security breach happened, and now the ledger's going this way. So it hard forked. But this one stops. All right, is my understanding. Tell me if I'm wrong. So anyway, to reverse transactions. And the reason is that this way, the bad guys who committed the security breach, bad guys, so they lose their stolen money. And unfortunately, then the good guys, they have to redo the transactions that got rolled back. But really not too hard. All right, so those are the 3 reasons a hard fork might happen in terms of on the back end. Sometimes, it's happened where a type of crypto just wants to add another type of crypto. Okay, they want to make a second version. That happens. I mean, and this is like where we talk about stock splits, where it's similar to a stock split. Sometimes stock is like, oh, let's make 2 kinds of stock, okay, and we split and we have A and B. All right, so that happens as well. So let's talk about what like this is tax, so let's talk about why we care about this, okay? So these forks are where we get second coins that we've heard of. The ones you guys have heard of, there's Bitcoin Cash, Bitcoin Gold, Bitcoin XT. I know there's more out there than Bitcoin, but right now when I'm recording this, that's where a lot of our users are, is just in Bitcoin. So that's what they know. Ethereum's also had a split, a hard fork. So hard forks happen with other types as well, I'm just saying, but they're just not commonly talked about. So they do happen across all platforms. So hard forks in and of themselves don't cause a taxable transaction. Okay, so in all those places where we, like with a security breach, with, I'm trying to think, like with new features and stuff, sometimes when they hard fork, if your investment, your value doesn't change, then there's no taxable value, or no taxable event, all right? However, if you receive some of this new coin that is created from the hard fork, then you're going to have a taxable event. Okay, and so let me say that again. Hard forks in and of themselves do not cause a taxable transaction. So if you continue to only own the same amount of the coin as you did before the hard fork, then no taxable event occurs. Okay, but if you get new coin, then you have a taxable event. Typically, you receive that new coin in an airdrop, and so that is actually in episode 12. We talk all about airdrops and the taxability. All right? So I hope that kind of helps you guys better understand what a hard fork is, and that a hard fork in itself, not taxable if your ownership, your value in the crypto doesn't change. All right, cool? So pretty easy, a little longer than it needed to be, but there's a lot of little pieces in there. As always, I'm going to end by telling you guys to please leave your comments, your suggestions, and your questions so I know what it is you guys need to learn and hear about, and what content you guys want on this channel, because this channel is for you. And also to subscribe. That way you guys are notified when we drop a new episode every week. All right, thanks for joining me.